Good morning, Predicted Trades family. Hope everybody is doing well. I see we have some new folks tuning in. Good to see you. Welcome to Predicted Trades. First let's have a little quick review. This week we've had quite a rally, moving off of some of our key zones, fighting up to the daily 8, which is this cyan stepping line, right? Made it to the daily 15 on Tuesday, this orange line, stopping short at 3,800 pretty much. Yesterday, we opened back below that daily 15. We take a little dip to the daily 8, which overlapped our key level here at 37.41, slipping it just a little bit, but ultimately getting back above. Whenever we have a key moving average, a key level stacked together, it should provide some good support. And yes, we can absolutely slip a little past it, come back up, and take off from it. And I still call that holding the level. Even though we slipped a hair past, that's fine. We were tapping highs from last week on a number of things, on ES, well, maybe not on ES, but on SPY, on QQQ. So, we had a big run and we got above last week's range. We came back and tested the top of that range while also testing some daily moving averages. We tapped all of those things and found our buyers again and took right back off for new highs and arriving yesterday at the daily 21. That's what we like to call the daily mean. It's the daily 21 EMA. So we arrived to it yesterday and pulled back from it. We came back to it and sat at it for most of the night session, at least during the Asian market hours, right? And then, Europe came in and took some profit down and brought us back kind of to where we opened yesterday. We opened around that 37.60. So we're approaching that again. We have our daily 15 and daily 8 getting stacked together in that 37.60 to 37.50 range. So we got a zone of support. Also overnight we have, I'm assuming, a 2-hour. Ooh. Yeah. So we have a 2-hour squeeze that started to form overnight. That could also provide support. We are slightly slipping below my tighter trend line from this week's lows on Sunday to Monday overnight. And I have a little bit of a looser from the extreme wicks trend line that sits a hair below and not too far from yesterday's low. After 1, 2, 3 very strong days, and after going from 3,600 to 3,800, 200 points up, we should absolutely be ready for an inside day. At least we should be preparing ourselves for an inside day. Any number of scenarios can play out in the market and will. We should not, we should keep our expectations in check. We should potentially not be expecting a huge rip to the upside after 3 days of doing that. We could be due for a consolidation. And we do have some key levels to watch for if we are going to actually break down and see bears take control again. And real quick for the new folks, I'll go ahead and load on the Beast tool, so you guys can see what it looked like yesterday and how we used it for our edge. Come on, Toss, don't freeze on me. There we go. Yesterday, we opened down at our outer shaded region. The way this tool works, it will plot a white hash line in where we open on any chart. On ES, we open overnight, 6 p.m., so it plots that open level. Yesterday, that open level was near 3,800. And pre-market, we slipped down through our open range buy zone and made it down to our destination buy zone, our outer shaded region. As you can see, the final line in that outer shaded region was right under that daily 8. So we had a lot of key things here to provide support. We saw ourselves reach up to reject that purple hash line. That's where we started to pick up some shorts. And we rode those down to the yellow hash line at the bottom of the shaded region, where we were locking up shorts and starting to build a long position. We carried that up, back to its open level, and even up to the top of our open range sell zone. We've got our open level, an opening range buy zone, and an opening range sell zone. And these levels are plotted in advance so that we know where we're going to be heading. You know, it's not some tool like an open range breakout tool that has to see 30 minutes and then it starts showing things. So, either way, we rode that up from our outer shaded region back to our sell zone, hitting that daily 21. That's when we locked profits on all of our longs. Oh, we saw some longs yesterday go 5x, 10x on SPY, SPX. It was a great day in the room. So for today, similar scenario. We have slipped down past our opening range buy zone. We, first popped up to our 21 and near our sell zone. Could not get to our purple hash line above. So we came back down. And we actually couldn't get to yesterday's high either. Kept stopping short. So we come back down, hit our buy zone, then go to our sell zone, reject, and now we're coming down to the purple hash line and finding some support. So these are kind of the levels to watch for today. Our opening range sell zone is up near 3807, our key level. That buy zone is around 3785. And our destination to the upside is up near our next key levels and zone above, if we actually can get breaking out above yesterday's high. But let me go ahead and remove this now before we get too far into where we are going for the day. Let's take a quick look at the economic calendar. Yep. Ah, that's the wrong thing. That's the one I want. Hopefully everyone can hear me okay, see my screen okay. I'm seeing, can I talk a bit louder? I mean, I've got the mic turned up. And usually most folks can hear it all right, so. It is Thursday. We have our initial jobless claims, continuous jobless claims that are always coming out Thursdays at 8:30. I had seen some reports that we've been adding quite a number of jobs, and our unemployment, our jobless claims have been going down. So let's see if we can get more numbers that show that they are going down. It'd be nice to see. We'll be seeing those come out around 8:15 or 8:30, so in 15 minutes. And we'll see how they react. If we have a favorable reaction or a negative reaction. Sometimes I don't even focus so much on the numbers. I just focus on the reaction. Tomorrow, another big one. We have non-farm payroll and a little bit more unemployment and job data, right? This whole week has been about jobs. I've talked about it in each morning prep. We had job data on Tuesday. We had ADP report on Wednesday. So more jobless claims, more job-related data coming out tomorrow. Next week, we want to keep an eye out for the big things that are coming. FOMC on Wednesday, CPI on Thursday. We've got some retail data coming out as well. And we have bank earnings that are going to be kicking off next week. So a lot of catalysts to keep in mind. Now, where can we go for today? Oh, come on. There we go. For upside, would definitely love to see us hold this 37.41 that we held yesterday. Like I said, I know we slipped it, but we got right back above it. And sometimes we slip it so that other indices can get to their key levels, right? And SPY tested last week's high around that 371, 372 and held. So for the upside, we'd love to see this 37.41 hold. Yesterday's low as well, obviously. We have the bottom of the squeeze and these two daily moving averages. So a lot of support here. If we start to take those out, that's the first sign that bears are taking control. 37.20 is also a big line in the sand for me. Oh, actually, they're stepping up a little bit now. Okay, I revised that. All of these are kind of the line in the sand. For upside today, we need to hold yesterday's low, 37.41, and these moving averages if we do take a dip at open. We are at this key, 37.73, that we are trying to hold. It has been support. We tried to hold near it pre-market yesterday. It turned into resistance, but then back into support. So we could just hold at this 37.73, not take too dramatic of a dip, holding above pre-market low, and start the trek right back up to yesterday's high, the daily 21. If we can push past yesterday's high and this 2-hour squeeze top, then the target zone is up here at 38.43, 38.65. But with a 2-hour squeeze forming and us in between the daily 21 and daily 8 and 15, we need to be ready for a sideways day. We need to be ready for some consolidation. In a way, you could almost say the last 2 days have been consolidation after the big push up on Monday. Right? Last week's range we were stuck in. We start to slip it on Friday. It's a quick look below and right back up. And we open at the bottom of that range and rip almost to the top and then gap out of it. We've had strong pushes and consolidated, little profit taking and another push. It could be time for consolidation again. So these are the levels to watch today. And we know if we can get through yesterday's high, yesterday's range, this is the next key target. If we start to break down yesterday's low and range, we're coming back to 3700, 3708. We have a daily Keltner right around that 3720 as well. So lots of key things. And we are in between very important daily moving averages, which we like to refer to as our liquidity zones. So we could just bounce around liquidity and get acceptance up in this area. Moving on to NQ. Just like the market, nice move up here. I have a trend line from the lows that start this drive. I always like to do that. We made it to the daily 15, came back, hit that trend line yesterday, almost made it to the daily 21. In fact, I think NQ might be the only index that didn't make it to the 21. We'll see as we rattle through these. Today, pretty much same thing. On NQ, would love to see this key psych level of 11,500, the daily 8 sitting there as well, the daily 15. We have a lot of support. So I want to see us hold all of those and start to pump back up to reclaim this 11,677. As you can see, we are in a wedge, and especially if we can open in it, we might stay in this wedge and make a move later in the day. We'll have to see. If we can hold this zone and start to head back up, looking to reclaim above this 11,677, get through yesterday's high, and tag this daily 21 that sits at 11,750. If we move past that at all this week, it's kind of mission 12,000, big key psych level above. If we start to break down this zone, coming back to yesterday's low around 11,400, and if that gives out, it could go right back to this 11,200, kind of where we flagged and consolidated on Monday. On the ready. Last week, I talked about this huge important key level, this 1656. You can see we slid into that zone, and we held it, only slipping a little bit to trap some folks. Then we held it, and even on Friday, we did not even get near it. And even on the overnight, where ES did set new lows, the ready held up to that key level. And now she's been ripping. She was the first index to get back to the daily 21, got there on Tuesday and just consolidated at it. Yesterday rejected, came back to the daily 8 and 15, and then right back to the 21. Hopefully now you guys can see why we track these daily moving averages and we use our handy dandy tool built by yours truly so that we can see intraday where those daily levels are sitting. So just like yesterday, where we opened below and rejected the 21 and slipped down to these moving averages. Just like yesterday, we're about to be in the same scenario. We are opening a hair higher, than yesterday. So for upside, we'd love to see these daily MAs hold. If we do have to take a dip, we have that 2-hour squeeze sitting just below 1750. And if we can hold those levels and start getting back above the daily 21, looking to get through yesterday's high, really highs from the last 2 days, and overnight around that 1780, and the overall mission right now, if we can keep trucking past that, is to get to that psych level of 1800. If we start to lose these daily moving averages that are sitting, kind of flanking 1740, then we're likely coming back to 1720, 1712, some of these last bounce points on Monday, past that, 1700, the last bounce point we had. YM. Yep, YM did make it back to the daily 21 yesterday as well on that last push. Tried to hold it overnight. The European session came in and pushed us back down. But overall, we are well above where we opened yesterday. And it could just be higher low, higher low, higher low. So, just like the other indices, definitely looking to hold these daily moving averages, this big psych level of 30,000. If we do have a dip during the cash session. We have this 2-hour squeeze. We are in between a lot of daily liquidity. We could just stay in this range, but if we can fight our way back up above the daily 21, get through yesterday's high and this squeeze top, then it's a mission to get up to, let's say first the 30,750, and then past that 31,000. Apple. Another thing you might notice as I truck through these names, one thing I like to teach is about moving averages on different time frames. If we just take a quick look back at YM. In this push, we have gotten above what I like to track is the 45 EMA, and that's kind of my line in the sand on any time frame for a change in trend. The push we've had in the last few days got us over all intraday 45 EMAs. These ones down below are basically, the last one is the 4-hour. If we start to lose that and reject it and head lower, we are changing trend on even the 4-hour. So we've had a great push. Now our moving averages are getting a little tighter. Yesterday, they provided a bounce. We did not have to get down to our 2-hour and 4-hour. And today, we're already trying to hold those. That's why, like I said on most of these names, getting down past these daily moving averages will also be getting below the Intraday, the 4-hour moving averages, which would mark a change of trend. So, something to note as I rattle through each of these names for the new folks. Apple has made a good push up, has been rejecting its 4-hour ever so slightly. So for more upside, definitely want us to get back above that 4-hour and start to push on to our next key levels. Now I'll come back over here. Sorry about that. So, there we go. On Apple, we did slip this 144, 144.5 zone, just enough to tag 143 and pretty much fill the gap back to Monday, and buyers stepped in again. If bears wanted to take control, they would have pushed it through Monday's high and back down to the last couple of bounce points. But they did not. Buyers took control, sent us back to new highs on the week, and at the highs pretty much tapped our 147.5. Now we've got our 2-hour squeeze setting in. So it's going to be the same scenario. We'd love to see this 144.5, 144 hold. Now our squeeze is providing support. If we take out yesterday's low, we are likely coming back to this 141, 140. Yeah, 140 was the last bounce point off that VWAP. But if we can hold up here, looking to get back to that 147.5 at the top of this squeeze and start to move our way out to get to the daily 15, daily 21 above, which are flanking 150, big key level. And when we have our squeezes stacking up like this, we basically just like to play it from one extreme to the other. Yesterday, we had a little pop, but we fell to the bottom of squeezes. And when everything started to hold, I said, hey, we are at the bottom of squeezes. We load long here, and that's what we got. To break down these squeezes, you have to push into them and push into them and usually close in them or a little outside for them to open up and fire. So, on Apple, let's see if we just stay stuck in this range today. And if we can hold above this 143, below it's going to start to slip more. But if we can start to take out 147, looking back to that 150, close around 146 with a 4-point ATR at 5-point, we can get there. AMD. Just like everything else, had a little slip yesterday, got a little lower into Monday's levels, right? So relative strength looking a little weaker compared to other names, but made a good recovery yesterday and back to the daily 8. Let's see if it can hold above this overnight wick. I like that down around 66 where the squeeze bottom sits. If we can get through yesterday's highs, it's trying to get back to 70 where the daily 15 sits and 72.5 where the daily 21 sits. And like I said, if we start to break down the 66, coming back to test at 64.5 and past that at 63.5. Amazon. Big old push off this 4-hour squeeze bottom on the Monday. Didn't even get back to it on the cash session, which was a very bullish sign. Made it to the daily 21, but yesterday did not get near the previous day's highs. But overall, still looking great and pretty much flagging up here above last week's zone. The top of last week's zone was about that 118, where now that daily 8 sits. So, like everything I've covered so far, if market does have a dip, want to have Amazon hold up this level and this squeeze bottom. It's looking pretty nice pre-market though, stretching up to that 121. So let's see if we can hold pre-market low, 19.5, keep on trucking up through yesterday's highs, Tuesday's highs, where, what is this? Yeah, where that 2-hour squeeze sits. And if we can get past that, it's a goal to get to that 125 and that first candle to the upside. If we start to break down yesterday's low and that daily 8, likely coming back to 116.5 first for a test. And past that, we'd be down like 115 again. VA. Just like everything else, made it back to its daily 8, holding up there. Would love to see BA stay above that 128, 130 today. Not that we need this to keep going to the upside, but we don't want it to keep going to the downside if we're looking for an upside thesis, right? BA does carry some weight. So let's see if we can hold up this daily 8, this 130 psych level. Make our way back up to 134. We have to get through all of these highs that are about 134. And if we can push past that, looking to get to 138, the daily 21. If we give out 130, 128, coming back to 126, 125-ish, right? Cat. Very strong, right? Got up above its daily 21. Leaving gap and go. Did not have to come back and test any of Monday's levels. And riding a nice little trajectory. It is in a wedge, and the squeezes are setting in. So let's see which way this wedge goes today. Would like to see us stay above the 21. If we start to lose that, we are going to start coming back to fill the gap and test our daily moving averages below that at 172. But if we can hold up at about that 175, 176, looking for it to get back up to 180. And if we can trek past that, we have the daily 50 sitting up above at about 184. Coin. Been very strong. Consolidating now between that daily 50 and daily 21. Oh, starting to push even more pre-market through yesterday's highs. It's had some good relative strength. I mean, look at it on Friday. The whole market sold off, and look what coin did. Relative strength. That's why this week a number of us hit those, hit coin off of this 62, and now it's up at 75. So let's see if it can keep its relative strength going. Yeah. If we can take out yesterday's highs around 75. Looking to continue up to 78 and 80, that psych level, next key psych levels. But if we start to lose overnight low, coming back to 70, and these daily moving averages flanking around 68. Google. Nice and strong off of 95 and back above 100. Had a great bounce yesterday. You know, it did get down to Monday's levels, so not as strong as other names, but great bounce. I mean, XLC has been a little weaker lately, but she's coming up and knocking on the door of the daily 21. So let's see if we can hold above 100 and above these daily moving averages today. If we can hold there, and maybe not even have to see the squeeze bottom if we have a dip, it's yet again a higher low. If we can get above 102, next stop would be 105, where the next daily Keltner sits. And if we start to give out those moving averages in 99, then we're looking at coming back to that 97.5 on our way to 96, where that next Keltner down sits. GS. Banks didn't drop so hard, still well above Monday's levels, and did not get back to highs. So they could be consolidating around these moving averages. I would like to see that continue. Definitely don't want to see us start to break down and lose this 302. We'll call it, well, frankly, yesterday's low. If we start to lose yesterday's low, we're coming back to fill the gap and the psych level 300. But would love us to just stay up above that 304, let's call it today, with the goal of trying to get back to Tuesday's highs and this daily 21. I'm just going to start accelerating through some names a little bit here. Meta. Definitely one of the weaker names in XLC. I know people see this and they think, oh, Facebook's back, and then it doesn't do anything, right? But it has made some good moves, and, dropping down to 134 yesterday at this squeeze bottom, notice that trend, made it to the top, came back to the bottom. Let's see if we get another test at the top. But it moved from that 135 back to 140. So a decent move, and definitely. Let's see if we can hold above 136, 136 and a half. If we start to lose that, coming back to the squeeze bottom in yesterday's lows. I'm not really expecting that we'd push past that. If we do, it'd be back to the extreme lows there. But let's see if we can hold that 136 on a dip. We could just keep trucking. Things are kind of picking up now. Let's take a quick look over at ES. Just to see, oh, haha. So our jobless claims data came out, 8:30. Favorable reaction back over the moving averages that have been holding us down overnight. So signs looking good for some continuation possibly. We'll see what happens when we open. Meta, let's see if we can break out of this downtrend from overnight. Looking to get back to 141, 142 at the top of the squeeze. Anything past that, 145 where the daily 21 sits. Microsoft. Opened, came down, and slipped a little bit into this gap, but nowhere near filling it, and held, if you look left, held up to some highs from last week. That's why, and I was mentioning earlier, actually it was highs from a couple of weeks ago. So I was mentioning earlier, the dip we had yesterday was a gift because it was just retesting the highs we broke out of on all of this rally and gap. And so many names held and kept going. Microsoft looking nice and strong. If we're, just one thing to keep in mind, if we're pushing a little too strong, pre-market, and we pop up quickly to yesterday's highs, we'll run into these squeeze tops and we'll likely see a little dip where everyone will be getting short happy. And it's really just them taking profit and then picking it right back up again, or taking profit and loading short. We'll know the signs to look for, we'll be calling them out. But for Microsoft today, on a dip, we'd love to see it stay above that 244. Obviously, the bottom of the squeeze. Daily 8 is right there as well at about 243. But staying above 246, very bullish. Let's see if we can get through 250, 252, with the goal of trying to get to about 254, where that next Keltner sits. We start to break down out of the squeeze bottom, then we could, and if we start to lose yesterday's low and the squeeze bottom, then we could come back to fill this gap down at about 241, 240, very key level of support there, where the daily 15 is sitting. Netflix. So I talked about this one in prep a little bit. Had it last week, on Wednesday, it made its big move and got way above the daily moving averages to this first Keltner up. And basically from there I said, it's the only name that's done this. Yes, we had a strong Wednesday on a number of things, but none of them broke out of the range they were in. Netflix did break out of its range. And what we can see has happened since then is basically just price acceptance in this new range before trying to break higher or trying to return to the previous range. Yesterday's dip on Netflix was extreme and did reach outside of our squeezes. And what did it do? It just got down to the previous range, right about to the middle of it. And then reversed and came right back up to these daily moving averages. We now have this thicker squeeze setting up. Let's see if Netflix that made this push higher and then came back and bounced right off of where it took off from. If you can see these pre-market wicks and these lows from yesterday. Well, let's see if they've had enough fun taking profit and, reloading for Netflix to get strong off of its daily moving averages, get back above 240 and back to 245, 247, where we've been topping out, with the goal of pushing to 250 and beyond. We do have a daily squeeze and a 2-day squeeze. Just saying, Netflix is stuck in a range right now. We do have earnings in, I think it's 2 weeks on Netflix. The 18th, yeah. A little less than 2 weeks. So, if you track Netflix, you might notice it does like to make a good move before earnings because it can get beat up on earnings and then get stuck in a range for a few weeks. Either way, Netflix, looking for these daily moving averages to hold. Definitely want us to hold above this daily 50 at 232 if we do have a dip. We're looking to get back up above 240 to 245, get to 250. If we start to lose 232, returning to 232.28, and if those give out, then back to this daily Keltner below, and back to the bottom of this range. NVIDIA. Oh, made such a nice move off of 120 up to 130. And yesterday from 126 right back up. Definitely, finally, rotating into chips again after a long break and consolidation. All right, we've had plenty of selling. We've had good consolidation, and now we're starting the journey higher. Let's see if it can continue. Made it back to the daily 21. If we can start to get through that and the squeeze top, obviously looking to get back to this psych level of 140 where the next Keltner sits. You know, not saying we get there today, but that is the target once we start to break. Maybe it's this week, maybe it's next. Watch trend line from lows. If we start to lose 130, we are starting to give out that trend line. And we'll likely come quickly back to this 127, where the daily 8 and 15 sit. 128, 127 at the bottom of the squeeze. If that starts to give out, then we're talking about retracing back to these levels that we bounced at, 124, 122. QQQ. Oh, just like everything else, we've got our squeeze. If we are going to take a dip, you know, we might just see 280 hold. It was support, then resistance. Now it's acting as support. So if we do have a dip, looking for 280 and pre-market low to hold us. But if we slip, we have our daily 8 and squeeze bottom below. You know, you can draw your trend lines for what a true kind of breakdown would be. And it would be giving out these daily 8 and the squeeze bottom. If we can continue to the upside, we've got psych level 290 and the next Keltner at 293. And keep in mind, squeeze on a Thursday, and we have NFP tomorrow. We could just stay in this range, folks. But I'm always going to give you targets to the upside and targets to the downside. Let's skip on through to SPX. SPX. We had an old gap back here. We opened at it and filled it. We gapped down at the top of it, rejected to the bottom, and filled it again. Normally I'll take away these gap zones once we fill them, but as you can see yesterday, it was pretty helpful. Trying to get back out of that zone, we reject. And we start going down and taking out our open level. That's a great sign to short. Down to the daily 8 and the bottom of this gap fill zone, where we reverse. So, got the daily 8, 15, 21. Could stay in between those if we can clear the 21. We've got some distance to go before the next Keltner. But like we showed on ES, we do have some key levels right above the 21 for the next zone to get to. If we were to roll over and start to give out this daily 8, we do have another gap zone below that we gapped down, fought back to, and then gapped over. So if we actually do start to break down below yesterday's low and 37.20, like I talked about on ES, we could get down to fill this gap. But obviously that would be bears taking control again and us breaking down and losing the key level 37.41, right? SPY. Same gap on SPY that we fought to and gapped to the middle of yesterday, opened near the top of it, slipped down, and didn't even completely fill it. But that's okay, because we did tap the highs from Monday. So, now we're trying to hold that gap zone. So for SPY today, we'd really love to see it hold 374 if we do have a dip. You know, if we lose that, we're starting to slip back into it. We'll have that 2-hour squeeze and that daily 8. And, you know, we could even fill this again, or completely fill it, hit 370, and still find buyers. Just talking about if we do breakdown, but we are in this zone today and in between moving averages. So let's see if we can hold 374 on a dip, trying to get through 380 to get back to key level 381.5, which might have been a previous gap as well, or maybe just a key zone. So there you go. We are in between some key zones on SPY. If we can clear that 381.5, looking to get up to 388 where we have a key level and our next daily Keltner, and apparently a next zone where I need to extend that over. Should we give out 370? We can easily come back to this 365.45. Not saying we're necessarily going to drop 10 points today. Just saying if we consolidate today and we start to look weak and give out this zone, ultimately we'll come back to the next key level. Tesla. Remaining weak, right? Got a great bounce yesterday off its third Keltner to the downside, right? Usually we can only hit and push against third Keltner to the downside so much before we start the reversion to the mean process. That's what we have seen on the market. It got down near third Keltners and kept hitting them last week, and then we got a reversion to the mean this week. Tesla could play some catch up. It's obviously got some news over it. With the whole Twitter issue, with the whole some delivery supply chain issues. Tesla reports in a couple of weeks as well. On the 19th, we could see a little push into earnings. And one little point I'll cover on Tesla. At some point, we saw some blips yesterday that some of the financing companies that may be trying to back this Twitter acquisition, some of those financing companies might be getting cold feet, or, you know, might be looking to back out of that deal. What could that mean? That could mean that if the financing falls through, that the deal might fall through. If the deal falls through, all that really happens is Elon has to pay a fine or an amount that's already baked into the deal. I think it's like $1 or $2 billion. I can't remember exactly. Which he can handle, right? He can handle paying that himself. It's not like $1 billion is going to come out of Tesla's books, right? Tesla was not buying Twitter. And yes, we saw Tesla slip and Twitter pop. But Tesla's may be slipping because they're thinking if this deal goes through, Elon's focus is going to be a little distracted. And we could see, that impact Tesla. But point being, should the scenario play out where the financing falls through and the deal falls through, Elon just has to pay a fine. Twitter will not be getting acquired. Twitter will drop, and Tesla will pop pretty hard. And should that all unfold before earnings, Tesla will really pop. So, on Tesla today, sorry for that spiel, obviously we need to get back to yesterday's high and try to push higher, back to this 250. We need to stop setting new lows. So let's see if we can hold yesterday's low, hold this 235 if we have a dip, and looking to get back through 242, 245 to get to 250, all in a goal to get back to really 260 in this daily 8. to see if we can go from third Keltner, start to work our way back up through second, then first, and then daily 21 sits at 275. All right, finally, UVXY and VIX, and then we're done. UVXY this week, rejecting squeeze tops, coming down to bottom, gapping down and through to the daily 21, where those squeezes start to open up and fire. Oh, of course, we get a little bounce to retest and fill this gap, which was rejected right back down. So, for upside in the market today. Oh, I would like to see UVXY stay below 11.5, start to work its way down and take out, or at least test, 11. And for overall continuation on the market to the upside out of the flag that we are in right now, want to see UVXY continue to go below 11 and get back to test 10.5 in the daily 50 below. But if we hold 11 and get back through 11.5, then we're talking potential downside on the market, and we'd see UVXY get through 11.5, come back up to this daily 8 and yesterday's high around 12 for a test, and then push through it to get back to this trend line in the Keltner above at about 12.25. VIX. VIX with a nice pop up to 30 yesterday and a full rejection and just slipped all day, making it back to our 28.8 key level. Already pre-market, we came back up to test our 29.2 and slipping right back to that 28.8 almost, back below 29. So, let's zoom in just a hair here. Sorry, I know this is a lot of stack levels, but they're key and we just try to track them, right? So, today, for upside in the market, would like to see VIX continue coming back down from 29.2. I'd let it get up to about 29.5 at most for upside to test this daily 8 and then reject and come back down. We're looking to get below this 28.8 and yesterday's lows where this daily 21 sits. Did not quite tap it yesterday, so definitely want to get to it. And ultimately getting below that 28, 27.5. Our daily 200 sits down near 25 if we can keep cascading through these levels. Not saying we get there today, likely going to bounce around all of these, 28 to 29.5 today. If we're going to see downside and start rolling over, VIX is going to get through that daily 8, 29.5, back through yesterday's high around 30, and start making its way back to 31. Kind of breaking out of this trend line that is continuing to hold us down. I know we got outside of it yesterday, but you'll notice we got outside of it before a couple of times, and I just haven't updated it because, it's working. Maybe I'll update. Yeah, if we click on this bad boy, maybe even just go to this wick from yesterday, from Monday. That's where we rejected yesterday. So would like to stay under that for upside in the market. That's pretty much it. Folks, thanks for tuning in. It is Thursday. It is free day. Where we will be posting our Beast tool. I'll be dropping it right after I get off of this. You can test out our Beast system. It should work on your options charts today for all the tickers that I just covered. We will be in our main chat and on voice today, calling everything out. So definitely tune in, listen to us, give us a try, see how you like it. We do it every Thursday, sometimes Friday. Maybe we'll extend it to Friday tomorrow as well, since we have so many new people that just hopped in the server and are interested. So thanks for tuning in. Hopefully this is helpful for everybody. Good luck today, and we'll see you in the chat.